Afternoon, traders. Happy Veterans Day to you all. This is Trader Tim from eminimind.com doing a Monday market analysis video. Thanks to all of those who have served and continue to serve. We certainly wouldn't be in these positions that we are, no matter where you're at. Um, we greatly appreciate all of you and allows us to do a whole lot of pretty amazing things, including trading from pretty much anywhere where we have an internet connection. And in the last couple of, 2 weeks or so, the trading has, swing trading has been sort of chugging along really nicely. You can kind of see in the daily chart here, very, very tight channel, upward channel, and those environments make for really good swing trading. And I ran through my swing trading positions in last week's video. So here's that little channel I was referencing. On the day trading front, I've been a little bit lackluster. There was a really good trade on Friday I wanted to highlight, which I'll get to here shortly. But if we start with the daily ES chart, we've got a lot of room to go between here and the 3200, which is sort of the next target. And if you look at how we've been trending here in the last couple of weeks, and we compare that to, June, where we weren't necessarily making new highs when we started the uptrend with the gaps, but we did then go into to break the high, the swing high, towards the middle and end of the month. And when you trend like this, where you have a pretty tight channel, where you can draw something like this, you don't get a lot of basing or consolidation occurring. And so what that can lead to is some of these bigger sell-offs that doesn't necessarily mean that the trend is done and completely changing, but these days, um, catching a couple of moves in these bigger days can be really, really good in terms of P&L. And so you don't want to get caught off guard thinking, oh, these ranges have been a little smaller, there's not as much movement intraday, and then all of a sudden, boom, you get some really good big body candles. And so as we sort of mimic that mid-June sentiment where markets sort of trending, chugging along. Ranges are not terribly small, but a little bit smaller. Some of these days only just above 10 points for the day in the entire range. And again, there's been some good trades, but we could see, a move up to, let's say, 3150 or 3100, and then a couple big days down that take us back to this negative 23%. But what we would need, what's really healthy, is to build that base, build that sideways consolidation so that when you do come down, you have a sort of a resting area. And if we look at some of these gaps that have occurred, last week we had sold off right to the gap fill, filled the gap, and then bounced. So same with over here on the 8th. Watch for those. If the market is selling off, if we're moving down and there's a gap just below us, mark that level and watch what happens at that gap fill. A lot of times you can put on a trade, in the opposite direction right at the gap fill and catch that reversal. So on Friday, if we go back, we had a big halfway back short, basically the trading hours only short for the day. And that came up and broke at 61.8. And when it did, sold off right to the halfway back long for the day, or the very next setup in the opposite direction. And at that point, you might say, well, the short didn't hold, so I'm not sure if the long is going to hold. So let me wait and get a little extra confirmation by seeing if there's any sort of a bounce there. And what you can do is just look at, um, look for signs of a basing pattern. In this case, we had the little double bottom breaking the swing high, both this one here and this one here, and then you can draw up a little setup on the 512, smaller setup, so your entry is a little bit higher than the 50% itself, but you get that little bit extra confirmation that you can then, you know, take the trade in the direction of the larger setup and then ride it for the longer trend and even target the larger setups negative 23% target. So I felt like that was kind of a nice way to end the week on Friday, and things were um, a little bit quieter earlier in the week. We had this sort of a doji candle, potential reversal candle, but all of these pullbacks or sideways movements have all come down. See right here how we fill the gap and then boom, we bounce. This one is still unfilled, but then over here, 2-day pullback or 3-day pullback if you want to include the first candle, sell off, fill the gap, bounce, and then boom, boom, sell off, fill that gap, and then today, I don't put a lot of credit on today since it's a bank holiday, but you know, pulling back slightly, I look for us to move higher in the next couple of days, maybe to the top of the channel, and then kind of repeat that pattern. So if that pattern changes and we don't bounce at a gap fill, maybe we break below this lower end of the channel's trend line, then you could draw a high to low on the daily retracement short and see if there's a reaction there. But I'd be more interested in seeing, looking for a long setup as we pull back, especially going, mid-November into December, expecting the markets to, continue up, even if there is a short-term couple of day pullback. So that's all I have for you today. Tomorrow morning, Tuesday, we'll be doing another live trading session. You can check that out at eminimind.com/VIP. Thanks, and we'll talk to you then.